Okay, again, the topic is building tomorrow's financial system, stablecoins, banks, and more. And ladies first, please.
Perfect, thank you. So my full name is Dr. Justine Scerri-Herrera. I am the founder of MK Fintech Partners, which is an entity which forms part of a large international top-tier law firm. We basically provide advisory, licensing, registration services. We have offices in Malta, where I'm based. We also have offices in Cyprus, London, Dubai, Kiev, and Greece. On a personal level, I also am a member of the VFA Executive Committee, which is an arm of the Malta Chamber of Commerce. And we basically represent all regulated VFA agents and VFA licensed service providers. And we also are very active in terms of participation with the regulators and governments in Malta and also in the EU to lobby in favor of crypto and favor certain regulations. In terms of my story of how I got into crypto, around 7 years ago, I was writing a master's on cybercrime, specifically jurisdiction in cyberspace, and that is when I came across certain words like decentralization and Silk Road. So when Malta started regulating in 2018, it was a natural progression and sort of evolution to be active in that space from a legal perspective. Thanks.
Fantastic. Josef.
Thank you. My name is Josef Jesko. I'm an investment partner at Sigil Fund. Sigil Fund is a fully regulated, experienced investor fund based here in Gibraltar. We have 3 different funds under the hood. The first one is Liquid Core Fund that does a lot of DeFi farming, a lot of staking. It's very proactively managed. The second one is neutral, a market neutral fund. We leverage a lot of stablecoins. That's why I'm participating at this panel, because that's my expertise in this particular fund. And the last one is venture fund in the partnership with the C Prime Capital. I've been in space since 2013. I did some mining very early on, did some arbitrage trading, interacted with the smart contracts when Ethereum came along in 2015, 2016, 2017, and then had some sleepless night when DeFi summer started in 2020. And thanks to DeFi summer, I met the Galaxy Brains from Sigil Fund and joined them as an investment partner a year and a half ago. We know many key players in the DeFi space and the GameFi space on a personal level. Many of them are anonymous.
So let me just get this. You know them on a personal level, and many of them are anonymous.
Excuse me?
You said you know many DeFi players on a personal level,
yes,
and many of them are anonymous.
That's right.
That's an interesting contrast. Okay.
I'm not gonna dox them here. Don't worry.
Okay.
And we are very well set up for the next bull market that will come.
When is that?
In 1 week.
Ladies and gentlemen, you heard it here first. Bull market in 1 week. I like it. Mike, bring a smile to my face. Make it 6 days. No, go.
No, I can't do that, I'm afraid. Mike Crosbie, I'm the Chief Business Officer at Blackfridge. We're based in the Isle of Man. We issue the first regulated GBP stablecoin. We are a fully cash-backed one-to-one stablecoin, now fully regulated, as I've mentioned. I was brought into the business to build the team. We set around the project about 2 years ago now. We launched on-chain middle of this year, launching in July on Gate.io, Bittrex Global, Uniswap, etc., etc. So what do we do? Well, what we do is very, very simple. We do one thing. We issue a stablecoin. The reason why we do that is to provide choice to the market, really. We came to a realization around the time of the pandemic when a lot of people were liquidating back into their fiat accounts, that they were being, sort of experiencing some slippage using USD stablecoins. was no choice on the market. So we set about setting up a pound token, or as it was called then, pound coin. Bank of England said, no, you can't call it pound coin. We've got one of those. So we had to switch to pound token early this year. We came to Gibraltar 2 years ago and had a fantastic time talking to the regulator here. We almost crossed the journey to get the license in Gibraltar. However, I'm based in the Isle of Man. We have the Financial Services Authority license in the Isle of Man. So it's a very similar kind of jurisdiction in a way. Like the minister said at the start of today, they're very proud of the regulator, as I think we are in the Isle of Man. The regulator has been very flexible to what we're looking to do. They've had to adapt some of their rule books to allow us to do what we do. So, yeah, as far as businesses goes, as far as elevator pitches go, people say, what do you do? We issue a stablecoin. That's it, right? It's dead simple. There we go.
Interesting. Sam, you're looking extremely serious in your picture. Are you really that serious?
Thanks. That's my best picture.
Okay. Go ahead.
It's one of 3, I think.
Yeah.
So my name's Sam Buxton. I'm the CEO and co-founder of Damex, that's our booth. Logo at the back. We're one of the 15 licensed and regulated DLT providers in Gibraltar. I think we were the 5th, now one of 15. Licensed and regulated in 2018, established in 2017. We're a regulated broker, dealer, and custodian. So we help you buy, sell, store your digital assets. Bit of background on myself. I was working with one of our co-founders at a company in Gibraltar called Wavecrest, which was a regulated e-money institution in Gibraltar. And in 2015-16, we were issuing 95% of the world's prepaid Bitcoin-linked debit cards. We had some clients such as Zappo, Wirex, BitPay in 2015-16. For better or worse, Wavecrest ceased to exist. Let's just say they were the first soldiers on the beach fighting a war and got shot down. But for the betterment of the wider industry and regulation as a whole, I would say. But from Wavecrest, we left our job before Wavecrest actually disappeared. We left our jobs and set up digital asset management in 2017 because we saw a gap in the market for a custodial and broker-dealer solution. Since then, we've evolved quite a bit as a firm. There's 50 of us in total. Our headquarters is in Gibraltar, and we are proud to be headquartered here. But feel free to speak to any of the guys at the booth for some more information about our company.
And thank you for being a sponsor. So,
cheers. Cheers.
So this is a big topic. Obviously, if you're talking about building tomorrow's financial system, and one of the bases for that is stablecoins and their interaction with banks. But one of my favorite expressions is, explain it to me like I'm 5 years old. Explain to me stablecoins like I'm 5 years old. Justina.
Okay, I don't have any kids, so this might be difficult. But so basically, stablecoin is a coin which derives its stability from an underlying asset. This could be fiat currency, which for those of you who don't know is legal tender money, so euro or dollar. It could be backed by commodities or other securities. It could be a mix of currencies. There are also algorithmic backed stablecoins, which is basically backed by algorithms which emulate supply and demand. You also have very creative models like DAI, which is where you're pegged to a dollar, but you're collateralized or over collateralized by crypto. So you have various different models. But the key element is that it derives its stability from some underlying asset. And if I can just progress further from this point, in terms of why stablecoins are so important, and specifically why they gave birth to decentralized finance, is because up until 2018, we didn't have stablecoins. And even though crypto was a very popular asset class for investment purposes, it lacked a key characteristic to be used as and looked at as money and currency, which is the stable store of value. So basically, stablecoins gave birth to DeFi, and some of the benefits are quite clear. We see them now when we're seeing dampened markets, where you can convert into stablecoins to protect your assets. Also in terms of financial inclusion for remittance purposes and payments. And lastly, I think which is most important is in the derivatives markets. So to settle in derivatives, you need to settle in stablecoins, which are booming right now in the trillions in terms of market volume. So that is sort of what a stablecoin is and some of the benefits in terms of why they fill the gaps which were needed to form decentralized finance.
Joseph.
I just wanted to add that actually the very first stablecoin didn't even have a token, and it was a stablecoin, synthetic stablecoin. Basically, you would buy spot Bitcoin, and you would hedge yourself by shorting Bitcoin on BitMEX, for example, right, in perpetual futures. And essentially, you were in synthetic doors, and you could then leverage that Bitcoin. You do whatever you want with Bitcoin. So you would essentially be in the ecosystem without having exposure in any crypto asset. And there is a protocol that is doing that in a decentralized way. I think it was on Solana. It's a UXD stablecoin. So basically, the protocol itself buys Solana in the decentralized way and then shorts Solana on decentralized exchanges. And then you have the token that is representation of this synthetic position. So that's a very, very interesting addition to stablecoins. And there are also many mixed approaches to stablecoins. For example, Frax Finance. You have 80 to 90% backed by USDC, and then the rest is backed endogenously by Frax governance token.
Fair enough. Now, is it fair to say that stablecoin is sort of an umbrella term that encompasses several variations that are sometimes quite different from each other? Are you going to nod yes or nod no? Sam.
Yeah, you're absolutely right. I mean, it's in the name, stable. Now, stability can be achieved in many different ways. Stable coins can be backed by fiat currencies, cryptocurrencies, some cases commodities, algorithms. So the key is in the actual name, which is, of course, stability. So
Well, I think it's also stable relative to X, where there's some X that's external.
right, or not, like a CBDC, which would be a government stable coin, which effectively isn't backed by anything. It doesn't require reserve, which is why it's so questionable. I don't know if that's a debate you want to open up.
Let me play with that idea, and I mean this in a non-snarky way. Is the US dollar a stable coin, or is it something else? To take that not snarky question.
Of course, it's a stable coin, and the X in your equation is trust of people globally, but not necessarily backed by anything since the removal of the gold standard, arguably, which is a really hot debate, but I don't know what side to put myself on of that debate, to be honest.
Fair enough. Mike, you want to comment?
Okay, no problem. These lights are really, really hot, right?
Well,
if anybody here has been in the armed forces, all I'm thinking about now is name, rank, and number. It's pretty ferocious. So stable coins. What was the question again?
Well, thanks, Mike, for showing up.
I'm here all day.
I was kind of throwing, well, there's two things. I was throwing to the group that, and maybe to the audience, that we should be a little bit cautious with the term stablecoin because it's sort of an umbrella concept that includes a heterogeneous group of concepts.
I'm back in the room now. I'm back in the room.
Okay, you're with us?
I'm with you now. Okay, so stablecoins. Okay, so the irony is not lost on us that we're issuing a stablecoin that's backed by a currency that used to be a stablecoin. It isn't anymore because it isn't backed to a commodity. It used to be backed by gold, right? So the irony is not lost on us. There are stablecoins that are in issuance now. So the Isle of Man pound is a stablecoin. Every Isle of Man pound that's issued has to be backed by a pound with Bank of England. I think maybe the Gibraltar pound is also the same thing. I'm not too sure. Scottish pounds are the same, right? So they're backed. CBDCs, like Sam said, aren't well, the plan is them not to be backed. And again, we could see a moment in time in the future potentially where you have a stablecoin like ours that's backed by CBDC, right? So you're backing by nothing again.
And I'm sorry, just for the audience, just make sure everyone's on the same page. CBDC equals?
A name, rank, number, central bank digital currency.
Okay, which is a government-issued.
Which is a government-issued currency, yeah. So most central banks at the moment, from my understanding, most central banks at the moment are considering, I think it's like 65% are saying we're past the stage where we're thinking about it, we're actually going to do something about it. And so CBDCs, from my understanding, is that they won't be backed. But there's I think for me, two distinct types of CBDC. There's wholesale CBDC and there's a retail CBDC, and it depends on really what the central bank's trying to achieve. Some central banks aren't going to want to interact with retail CBDCs. They'll just want to be the Bank of England and issue a CBDC that's just wholesale and facing banks or institutions. Yeah, it's gone again.
Fair enough. Now, as the good doctor alluded to, there's algorithmic stablecoins. Is that ultimately a workable concept? Can you have a long-term stable algorithmic stablecoin, or will it inherently eventually diverge from some underlying asset like perhaps Luna did? You've been selected.
So we saw what happened with UST. In certain way, there are many other stablecoins that are also algorithmic or backed by crypto assets only.
Actually, let me modify my question. Is it, just give us a brief moment, is it fair to describe Luna as an algorithmic stablecoin? Was that a fair characterization of it, or is it more like a collateralized, how would you put it?
Well, the problem with Luna was, it was collateralized by Luna, the native coin of Terra blockchain. However, it was very reflexive, right? And this reflexivity we don't have anymore in any of the major stablecoins. And the reflexivity was there because, for example, imagine the price of Luna was 100, right? You took 1 Luna, you burn it, you created 100 USD. Now the price dropped 90% to $10, right? You take 100 USD, you burn it, you create 10 Luna, right? 10x. The price keeps falling. So that it's very, very reflexive. And once the domino effect starts, then that's the end game, right? So that's what happened with Luna. There are other stablecoins, for example, synthetic USD, which is a stablecoin of SNX, synthetics protocol. And there are some measures that doesn't allow this reflexivity. However, in a full market crash, if the price drops 90% within a few minutes, it could happen as well, right? So, as I say right now, the algorithmic stablecoins failed. They failed miserably. If we make them to work, it must be some mixed model. For example, as USD.
Okay, so it can't be a pure.
It cannot be a pure algorithmic stablecoin.
And let me throw the group, is USDT and USDC sort of dollar equivalents, theoretically backed by dollars, are those reliable? Are those stablecoins that we can use? Who's going to take who will take
they are fiat backed, right? So these are backed by real world assets, right? RWWS. So as long as they keep the same amount of assets, right? In a bank or in treasuries or in the commercial papers, then yeah, they are. But they're not really decentralized.
Okay, and you mentioned that.
So I can only really comment on what we're doing, which is a good time to plug GPT, right, and what we're doing. So we believe that stablecoins should be currency backed one-to-one at all times. We don't think we should be lending out the collateral. We don't lend out the collateral. We keep it in a segregated bank, nice and safe. We believe the use of stablecoins will continue to drive or to grow from trust. Not only choice in using different types of stablecoin, they're popping up around the world. There's Australian dollars, Singapore dollar, Brazilian, there's all around the world, stablecoins popping up. And we think that the real trust will be derived from regulation in the correct jurisdiction for those stablecoins, because that's where you believe that the regulation should primarily be, right? So we back it one-to-one, no lending. What we're also doing is being audited by KPMG monthly, so they can say, a monthly attestation is produced that says, this is the number of tokens you hold in issuance, this is the amount of pounds in collateral you hold in the bank. It matches one-to-one at all times, right? So in the month that happens. We're also working with Chainlink to deliver a real-time proof of reserve. So users can come out to our website. They can see in real time that Chainlink are firing an API into our bank account that reads the balance. They're reading the blockchain, tokens and issuance, and going, yeah, that's one-to-one. That's all times one-to-one. That's what we believe should be the case. And I think that from what I'm reading about stablecoin regulation around the world is we're sort of deriving the same sort of ilk of stablecoin that's coming up. I'm not going to talk about stablecoins that are in issuance now. The most popular stablecoins do different things, right? But they're all, I think maybe they're sort of narrowing their focus towards one-to-one currency-backed. Obviously, there's, I'm not really going to comment on the failures of stablecoin because I don't want to be in that soundbite.
Sam.
Yeah, I'll just follow on from that. I think there's space in the market for different types of stablecoins, of course, different types of algorithmic stablecoins. I completely agree that today algorithmic stablecoins have failed, but there will be perhaps a future where there's a few success stories, multiple success stories, where they can coexist. So I think there's room in the market for algorithmic stablecoins to coexist if we eventually get it right. There's certainly space, and as we've seen today, for different stablecoins, fiat-backed stablecoins, whether it be one-to-one or via one-to-one via T-bills or just pure cash in bank. There's certainly space for them to coexist. We've seen USDC, USDT, even BUSD that go through Paxos in Asia as their issuer. We've just together, that's close to 200 billion in market capitalization, which surely is going to, from what we've seen internally anyway, behind the scenes, that's trending and that's growing year on year. So that will be approaching the trillion mark in the next couple of years. And then there's the argument, can CBDCs or government-issued stable coins coexist with the stable coins we have today, which are backed one-to-one with underlying fiat? And I think that there's a world for that as well. And it might just be a case where the stable coins that we know today that are backed one-to-one with fiat in centralized banks might just be backed one-to-one with CBDCs in centralized banks. And then we're living in a world where our daily transactions, our retail transactions, we're not using stable coins that are issued by central governments. I don't think they're interested in the retail space. They'll probably stay at the wholesale level. And what you'll have is regulated gateways around the world. In jurisdictions like Gibraltar that are really early with regulation or specifically regulating gateways that will then deliver these new digital-backed assets to the retail market. Where we'll all be using them on a day-to-day without really knowing anymore that we're using stable coins. For us, it'll just be an average transaction, similar to how most of you today will not take your debit card out of your wallet. You'll just use your Apple Pay. How fast was that transition in the last couple of years, right? Think about it. When was the last time you took your debit card out your wallet, unless it's for the wrong reasons? It'll be a quick transition. It'll happen before we know it. Anyway, that's my prediction.
I have to admit, I finally got on the Apple Pay. Here I am, Mr. Tech Lawyer.
It just happened? You just did that?
I'm mostly out of Dubai, and everyone's like popping out their phone, paying that way, and I'm like, what the heck is this? Because I guess, back in retrograde Los Angeles, it wasn't happening as much.
Yeah, the US is typically a lot slower to adopt payments technology.
Yeah, the US, we're still working on metric. Don't take the lead.
The US is chip and pin.
Yeah.
The US is chip and pin. And the US also closed down potentially one of the most impressive proposals for a stable coin, which was Meta's, or back then Facebook's Libra, which was the most impressive I've seen to date, and the US shut that down real quick for reasons.
Before you get too impressed, I gate crashed Libra's main headquarters in Geneva to see if it was real, and it was just a PayPal co-working space, and I'm not kidding. Okay, fair enough. Yeah, they were remote. They had offices all over the world, and actually one of our chief product officer was one of the guys working on the project hands-on, so for sure it existed, just to give you that confidence. You're kind of leading into the regulation discussion, which is the meat of all this. For stable coins to interact with banks, to redo the financial system, regulation needs to either accommodate or catch up. Is it going to kill the baby in the cradle? Is it going to embrace stable coins? Will CBDCs, you kind of alluded to it, can they coexist? What do you see the future of regulation and government interaction with these? And Doctor, please.
I have a lot to say. So I would say that stablecoins are definitely in the hands of regulators these days. So one, there are certain stablecoins which could fall within the cracks. So for example, when it comes to e-money, there are certain two key components which you need to satisfy to fall into the e-money categorization, which is one, being pegged or backed one-to-one by fiat, and secondly, to have a claim against the issuer. So for example, USDC and some of the others have both these components, so they would fall under e-money. If you have a stablecoin which is pegged or backed one-to-one, but doesn't offer a claim against the issuer, you could easily fall within the cracks and basically, not needs to be regulated. So it's very important to see the business models of these type of stablecoins before going all in or investing in these assets. Secondly, in terms of regulation, so much has happened within the last few months. So a lot of movement in this space. And basically, why are regulators so interested in regulating stablecoins? As I said, there is this key component, store of value, which makes stablecoin attractive to fulfill the role of payments. And basically, regulators and central banks all around the world feel that their bread and butter, which is the supply of money, is under threat. It's a bit too little, too late to completely eliminate or restrict them because of the amount of disruption that it will cause in the markets. Namely, if there is a failure of one of the big, let's say, USDC, USDT, dollar-backed stablecoins, you will trigger redemptions. And basically, if these assets are backed by, real-life assets like debt, bonds, commercial papers, then you will have an overflow effect on the traditional financial markets. So I think it's gotten to the point where it's too big to eliminate. So obviously, they're coming in and saying, how can we regulate the space? And they're basically taking the approach to regulate them similar to banks. So liquidity, reserves, risk management, etc. So obviously, depending which jurisdiction you're operating from, there are various different approaches which are being explored. When it comes to Europe, I would say we're the most advanced in terms of where they have a bill which is going to become law. So who here has heard of MiCA? Can you just do a raise of hands of who has heard of the word MiCA? Okay, so basically MiCA is a directive focusing on crypto regulation, so regulating crypto asset service providers and issuers in Europe. And this is a very important directive because it's basically already done in terms of the text has been approved, and in January 2024, all operators operating in Europe will need to comply and get a license or registration from a European entity and then passport your services all across Europe. In terms of MiCA and stablecoins, to remain on topic, I would say that it's not favorable at all for those issuers who want to peg or back their stablecoin by euro. This was, of course, a deliberate move due to lobbyists from the ECB. And for those of you who in the audience know me, I've been sort of advocating on these 2 points. I'm going to say it for quite a while because they're sort of very, very important. So MiCA states in the text that is going to limit the daily trading volume of stablecoins which are pegged or backed by euro. So if you issue a stablecoin on the market, you're basically limited in terms of market cap to 200 million. So just to give you some context, Tether has a daily market trading volume of 50 billion. So when this text, was being circulated, a lot of US crypto firms and issuers and whatnot said, hey, what about us? Does that mean that we are limited from being offered and used and bought within Europe? And a lot of crypto lobbyists contacted the European regulators, and they actually convinced them to remove or restrict the interpretation of the text in order for them to be offered in Europe without these restrictions. So this only happened yesterday or the day before yesterday. So if you are a stablecoin issuer being launched in Europe, you have these restrictions. And this is, of course, not to compete with the euro. But if you are a dollar-backed stablecoin being launched or you're already launched and want to continue offering in Europe, you won't have these restrictions. which of course is going to also create a massive imbalance and shift of power when it comes to
I'm sorry,
the underlying
you won't,
asset.
just be clear,
Yeah.
if you're issuing a US-based stablecoin in Europe,
So these were going to be overarching regulations. So like USDC, you're issued or registered in US. So the text, as it was explained before, would limit issuers, even if you are not launched in Europe, but you would still be restricted in these ways in terms of market cap, not allowing passive income, and so on and so forth, if you are being offered in Europe. So now they basically edited the text for stablecoin issuers in regulation like USDC to still operate and continue to be offered in Europe without these restrictions. So if that clarifies things a bit further.
a little bit. Now, I've also seen there's been a trial balloon floated in the United States, at least, that stablecoin issuers need to get a bank license, which makes my skin crawl.
Bank license or approved by some special regulator, like Consumer Innovation Authority. So depending on the state, but I saw a bill which was going to be approved in California, which we were discussing yesterday, which basically states that they're all bank-like in terms of regulation and requirements.
Well, it does make, I'll throw this open to the group, whether I like it or not, it makes a little bit of sense because you are receiving in dollars, in theory, and getting depository receipts in a way, in the form of the tokens, and those depository receipts are being traded. It's almost like how money started off in the first place, where banks would hold your gold and give you a depository receipt for the gold. Eventually, people just started trading the depository receipts for the gold. So, is there a good argument for treating pegged stablecoin issuers as banks? And Sam, I see you chewing on this one.
Yeah, I'm not too sure, to be honest. It's sort of too early. Over-regulation can sometimes stifle innovation. So maybe it's a little bit too early for all that. We still need to see the market advance a little bit more.
I'm not saying I like the argument. I'm saying I see the argument. Mike, do you want to comment?
I think if you think about what banks do, they're deposit takers, and they can lend money and other services, right? So I think I just relived the last 2 years of my life, going through regulation and what we're trying to achieve with our stablecoin. We spoke to our regulator, and the first thing he said to us, well, this sounds like e-money on blockchain, right? So for that you need a financial services license, where we are in the Isle of Man. So that's the road we went down. So that's not a banking license, but it's a banking license light. But it allows you to do one thing. It allows you to issue a stablecoin on a blockchain, because the blockchain is just a technology. So we become an e-money business, and we're licensed for being an e-money business. We don't lend out stablecoin. We take in customer deposits. We keep it on an account, segregated, and it follows e-money rules, which is exactly what's been explained just a moment ago.
I'm sorry, let me jump in. So I think, from a regulatory perspective, I think a stablecoin issuer almost certainly is a financial institution. It's probably a money transmitter. I just wonder if they're a bank.
Well, if you want to be, the choice is yours, right? So if you set up a stablecoin tomorrow, the choice is yours. Do you want to be a bank? Do you want to take in customer deposits? Do you want them to earn interest on their deposits from holding your stablecoin, however that looks? That means that in our jurisdiction, I think probably in the UK and elsewhere, you become a bank for that reason. You hold customer deposits. I mean, the objective of a regulator is to protect the consumer, ultimately, right? So, and you do that exactly what Sam says. You can't over-regulate a space because you just stifle innovation. So if we went to our regulator and said we want to do a stablecoin, and they said, well, you have to be a bank, what's the rationale for that? We're not being a bank. We're being an e-money issuer. We're a money transmission service business. So you can become a bank if you wish, but I mean, why would you?
I wouldn't choose to be.
Sure.
This is being floated in the United States, and I have mixed feelings about it. Just maybe you want to comment.
Yeah, I just wanted to add that, if there is too much regulation, the crypto-native projects, for example, MakerDAO, right, which is one of the first DeFi platforms, and you can mint DAI by collateralizing several assets. There was a very pivotal moment in the crypto regulation history when US Treasury put some smart contracts that belong to Tornado Cash on the sanctions list, right? Tornado Cash is a mixer. You put in Ether, USDC, DAI, WBTC, you withdraw it to another wallet, right? And nobody can link those two wallets if you have very good OPSEC. And there is zero knowledge cryptography that allows this process. Now, who are the three main groups that use this service, right? There are bad actors, good actors, and there are mercenaries, right? Bad actors are criminals, money launderers, scammers, right? Probably the biggest, heuristically the biggest group. The second group are good actors, right? These are the ideologists, people who really believe in the ethos of decentralization, of permissionless systems, of programmable money, right? And there are many of them, especially in the Ethereum ecosystem. And people in the
I'm sorry, did you just throw shade at Bitcoin?
Sorry?
Did you just throw some shade at Bitcoin?
I think it's a really interesting dynamic between Ethereum and Bitcoin.
Sorry, go on. Okay, but yes, people who are into Ethereum are crypto purists. I agree. Go on.
Anyways, and the last group were mercenaries. So these are the smallest group because you could deposit these assets into Tornado Cash, and then you could farm, you could earn some governance token of the Tornado Cash ecosystem. What happened was that immediately after the U.S. Treasury issued this statement, USDC took proactive measures, and they blacklisted the smart contract. They can blacklist any address that holds USDC. So if you hold USDC in your Ethereum own wallet, anytime they can push that red button and they can blacklist it, right? So it's not really decentralized.
I mean, it's kind of scary. It's like a centralized CBDC. It's like a Facebook of currency. They can just freeze your account
exactly.
and there's nothing you can do.
It's not decentralized at all. Okay. The problem is that MakerDAO, right? MakerDAO DAI currency started in 2018, I believe, and it was fully collateralized by Ether. Later on, in 2020, in March, when there was a big crash, right? When deleveraging de-risk effect, all the assets were dumping in 12 of March 2020. It happened that some of these positions, people minted DAI, they over-collateralized with Ether. Ether dumped like crazy. And this position became under-collateralized, and there were no liquidators coming in to repay DAI and take that Ether, right? So somebody was able to repay DAI, was able to take all the collateral without repaying the DAI, right? So basically making the whole system under-collateralized. So then MakerDAO decided, okay, we need to do something else. So let's bring some real-world assets as collateral. So they brought USDC as collateral. And USDC represents more than 80%, more than 60% of collateral in the MakerDAO system, right? Which is not really decentralized at all. DAI, however, can be used in Tornado Cash as well, but they don't have the freeze function, right? They cannot freeze it, so they cannot be compliant with the US Treasury. So what do they do? There is a big risk that USDC will blacklist the DAI contract, right? The smart contract that DAI uses for collateralizing DAI. And this is a huge risk for MakerDAO DeFi platform.
There is.
So there were three groups within the MakerDAO, like political groups. Number one was futurists, and the founder of MakerDAO is one of them. They want to make the clean money. They want to make fossil fuels obsolete using DAI as a currency, whatever it means. So they have a grand vision. The second one is centralists. They don't have any vision, but they want to get shit done, and they want to bring real assets, including USDC, including issuing loans to certain banks. They already issued a loan to a bank in the Philippines. I forgot the name, but already 25 million was issued as a loan. And the last group is the centralists. These are the really ideological people who want to make MakerDAO system completely decentralized, right? Which
I'm going to pause you there because we're actually out of time and I'm getting the signal, but you're leading in perfectly to the next panel, which is on DeFi. So I want to give a big round of applause for our panel, please. Thank you all so much. Thank you for supporting. You're great.